Many thanks for coming in. Let's go through the numbers. Let's go through the numbers first of all, starting with the Trans-Century, which has reported quite some dramatic numbers. We didn't see this coming, at least. We might have expected some development, but not quite as significant as this was.
Basically, I think you do know that cables also recorded quite a jump in their profits. So
yes.
This was a major contributor to the numbers we've seen coming out of TCL. And I think Kenyan companies have proved rather resilient. Despite the macroeconomic environment where we've seen a slowdown in growth, they've continued to post increased profits and show impressive growth. So I think we should actually expect that from a lot of the companies, listed companies, as they release the half-year results.
Because for Trans-Century, 241% jump in pre-tax profits to sit at 564 million shillings is quite significant. But cable is what I want to pay a bit of attention to. 57.5% growth in pre-tax profits, driven by exports and new products. What do you think of East African cables, very quickly? I think the diversification out into the region has really helped them. Also in Tanzania, and especially they've bought a company in Tanzania, and we're starting to see the proceeds coming from this. And also regional trade has really moved up. If you looked at the KNBS numbers that came out, it showed regional trade is almost moving. Is actually contributes to most of our GDP as opposed to exports to the the Eurozone. So this has largely contributed to the numbers we've seen from cables. And also we've also seen a drop in global commodity prices, or metals, copper being one of the main raw materials. Let's talk about the NSE as a whole today. Turnover jumping to 72.8%, largely because of local investors accounting for 67% of the trade. But something worth notice, there's a lot of rallying, especially in the banking stocks.
Yes, we've seen quite a rally. KCB shot up went up all the way to about 2450. Barclays also at about 1450. Quite impressive.
Yes.
But this is quite expected. KCB will be
and KCB is at a 9-week high, for instance.
Yes, they actually will. And we've seen a lot of foreign interest in this, but also a lot of locals are coming in,
right, trying
to take positions, because what we're seeing as liquidity comes in and as interest rates come off, what we're beginning to see is a lot more money is coming into the equity market. And for example, the market closed today with a huge demand overhang on most banking counters and very little supply. So investors are also beginning to look at their investment risk and in the equity market, because if you were to exit now, most probably the market will continue rallying and you'll be able to come back in. Yes.
Let's now move on to the currency, which is still taking a bit of a hit for the third straight day. What are you hearing in the market?
Just as you mentioned, of course, the usual end-month demand, but
yes,
also maturities, huge maturities coming in. In the month of this month, July, we expect total maturities of T-bills and T-bonds of about 31 billion.
Right.
That's huge. Up till September, if you include what you expect in August and September, that's about 100 billion
yes,
in total. So I think the governor will have quite a lot on his hands, because he is still a bit jittery about the shilling, but I think it's a foregone conclusion. We all expect there's an upward bias for the shilling to weaken. So that will happen no matter what he does. He's been trying to mop up progressively, but the liquidity is still coming in, and he also has to keep an eye on the rates. He doesn't want these to shoot up at the beginning of the financial year. So the shilling, we expect, will continue sliding up, although marginally but it will continue moving upwards.
Tell me about this one. Consolidated Bank managed to raise $20 million, actually about 1.7 billion shillings, in its medium-term bond. At the same time, it was almost competing with the government. Was that unusual?
It was actually expected. The interest in the Consolidated Bank bond was there was not that much interest, considering the offering a fixed rate return of about 13.25 on a
yes,
7-year paper. If you compare this with the market, where the 10-year paper, people are looking at levels of 13% risk-free compared to Consolidated, which is a corporate bond. I think what happened is the market priced in the risk, it being a corporate issue, and did not feel that a return of 13.25 was actually adequate. So that's why we saw a slight, although they did pretty well in this market, but that's why we saw a slight undersubscription.
All right, we'll leave it there. Ken Minjire, asante sana.
Thank you.
Always great having him on the program.